Good morning, guys. Happy Friday. It's October 18th, 5:27 a.m. Central Time. Grain markets are mixed this morning. Matt Bennett is here. Guys, let's start off with some cash grain market stuff.
Corn and soybean basis bids at the Gulf have improved this week. Soybean basis bids at the Gulf have been curiously strong amid a combination of improved export demand and falling water levels on the Mississippi. Reuters reported late yesterday that CIF October soybean barges were bid 112 cents over the November 24 Chicago Board of Trade contract, the strongest level since August of 2023. Corn demand to Mexico in particular has improved greatly, also resulting in some basis improvement. Calendar spreads in both markets have also exhibited strength.
Matt, before we discuss the reasoning for this, we've got a chart here, CIF US Gulf soybean basis. It's on fire. Explain what this means to me as if I was a 5-year-old, because I think we don't talk about this stuff a whole lot, and I want to do a quick explainer.
Right. I mean, it's just a function of what it costs essentially to get beans to the Gulf, and obviously, as Kinsey said, river levels are a function of that. When you get river levels low enough, of course, you can't float full barges down the river. It just causes logistical issues. Quite frankly, it's just kind of expensive to get these down there. The thing about it is, though, is that we're very competitive out on the world market. And so there's a lot of diverging things going on here, Joe. This is a complicated thing that we've seen happen this week, and we can dive into it however you want to. But yeah, it's just a function, of what it costs to get these beans down there.
Okay, well, it could also be a function of demand.
Yeah,
And
absolutely.
the stories that we've seen is like, okay, this is maybe partially because of the river levels. That's absolutely part of it. Part of it's because of demand, maybe. I've also heard that maybe there's a commercial entity out there that was caught on the wrong side of this thing. You think that's a possibility?
That's the exact same thing that we've heard. I keep asking people that are in the know, hey, who's buying beans? Like who's bidding this
Right.
thing up? Who's really wanting beans? Because essentially, it's what are people willing to pay to get these beans, right?
Yeah.
And so everybody's telling me it's not anything new. It's no new business. There's some old sales or old purchases, if you will. Someone's caught on the wrong side of the market and they're buying the heck out of this thing. So I don't know. It's very complicated this week. It's hard to decipher through it. It makes no sense because I mean, someone mentioned whether it's you or Kinsey, Mexico business, for corn. Here's the thing. You would think that there's quite a bit of business going on, but that's the biggest business we've seen this week. It's not like China's in just buying hordes,
Right.
Of beans here, and so or out of the Gulf. I mean, it's just it's very interesting.
Okay, so you got basis strength at the Gulf. Have you noticed or heard interior basis improvement? Because I've heard some of that also.
I mean, there's some interior basis improvement. And where you're going to see it, of course, is where people are winding down with harvest.
Yeah.
So if someone is in an area where there's 4 bean fields left, yeah, your basis is fantastic. The last person to cut their beans is probably going to be happy with basis if they have to take cash price. But you're not going to see that much as far as corn is concerned right now, especially in some areas like. For instance, right where we're at in Central Illinois, the elevator that we were delivering to, we're out of storage on that particular farm. Long lines, basis has widened the last 2 days. What do they? They're going to the ground, So when people start going to the ground, what do? I mean, they are not going to improve basis for folks, and so you'll see it with beans right now. But I'm not hearing it with corn. If it's with corn, it's got to be with an area that's pretty much wrapped up.
What do you make of the strength in the spreads? So this Nov-Jan spread in soybeans has been a rocket ship. I mean, this is not something that you're normally going to see in the middle of harvest. I guess we're kind of moving toward the tail end in soybeans. But you've got spread strength in soybeans. Similar chart, Gulf basis. Corn has been stronger, back to kind of where it peaked in September. So not as crazy as beans. But corn spreads have rallied also. The old grain traders will tell you, hey, it's spreads move first, then basis. Then the futures market's going to follow, right? So are we supposed to expect a futures market rally now that we've got basis strength and spread strength? Or is that basis strength just something that's kind of abnormal at the Gulf?
I think it's a little bit abnormal at the Gulf, but as far as spreads
for the wrong reasons, maybe. Does that make sense?
Right. I mean, here's the thing with the spreads, Joe. I can't explain necessarily why spreads are getting better. I mean, one of the couple of guys with JSA said that, some of this export business sometimes will be aligned with spreads strengthening.
Mhm.
But at the same time, I mean, I'm like, why would spreads strengthen whenever we're sitting on the stocks numbers that we're looking at? Like, for instance, with soybeans, it makes zero sense to me. Okay. With corn, I think that you're developing a bit of a story with corn, but still spreads in the middle of harvest. I mean, why would you be buying your front months whenever we really don't want the corn? I mean, most of your elevator systems are going to say, oh, we've got all the corn we need right now,
Yeah.
right? We'll take the corn, we'll figure out something to do with it, but we're not going to, in essence, bid up for it. I don't understand the spread strength at this particular time. I don't get it.
The soybean thing especially feels to me like somebody's caught off sides. That's what it feels like.
Absolutely.
I could be totally wrong. We'll see what happens. Let's get to the drought monitor.
So the Corn Belt was mostly dry last week, with the exception of some scattered rainfall in the northern portions of the region. This caused drought conditions to improve in northern Minnesota. The rest of the area, however, saw conditions deteriorate. Nearly 83% of the Corn Belt is experiencing some level of drought. The hot and dry weather pattern continued across the high plains. Drought conditions worsened from South Dakota all the way down to Oklahoma. When we look at the percentage of U.S. areas experiencing drought, corn country, 62%, soybeans, 54%, winter wheat, 52%, spring wheat, 32%, and cattle country, 52%.
It's really dry out there. A lot of areas.
Super dry. And so to me, I mean, yeah, you're getting into this La Nina thing as well, right? So I don't know. I mean, I haven't talked to Eric Snodgrass about this before. I talk to him about big picture stuff all the time, but I'm interested to know, the tendencies of a really dry fall leading into the following year. There are some correlations there at times, and I don't know if a La Nina year is one of those years that we really have to be mindful. But I'll tell you, Joe, when you get this dry going into winter, it can cause some issues for sure. I mean, there's a lot of things that it brings to mind for me, but you go into the following year without a full soil moisture profile, and that's not what you want to see happen, especially if you potentially have a dry tendency for next summer. So yeah, it's dry though. I mean, you've heard it. We've talked about it already. Combine fires have been something that we've had to hear about this year. It's terrible. I feel bad for those folks. It's tough though. I mean, we've been like super careful, but it doesn't matter how careful you can be. I mean, you can blow everything off your combine, and then if a bearing gets hot and there's a little bit of soybean dust or corn dust, and what do you know? Now you got a fire. So you can be careful, but I'll tell you what, you can't be too careful in this type of environment.
To look at some present and potentially future weather, there's a little bit of rain on the radar over the Dakotas here this morning. The forecast is largely dry until about October 30th, and the GFS extended run indicates that you're going to see some more widespread-ish rains return to the Corn Belt, and that would be helpful for a number of reasons, especially the river. And to go back to those basis charts, these restrictive levels on the river are absolutely responsible for some degree of that basis strength. It's just a question of how much.
Yeah, absolutely. I mean, the river levels are a major problem. That's all there is to it. It's not just beans going down, which, of course, we ship some corn as well, but not this time of year. I mean, this is beans time to shine, right? So it's not just a barge filled with beans. It's fertilizer coming north too. Yep. I mean, you've got to think about that as well. And so, it's no secret that fertilizer's not been cheap. And so, yeah, fertilizer is not going to get any cheaper if you can't load a barge fully. I mean, it's just, I don't know. We've got to see a pattern shift here. And there's no guarantee that Mother Nature is going to cooperate. But I sure hope that the chart that you just showed for rainfall, I mean, that is a nice, broad, wide rainfall distribution. And if most folks that are harvesting right now get the opportunity to finish, and then they get a good soaking rain. Now, some of them may not have all their field work done, but I think we'd all agree that if they can get done with harvest and then get a good soaking rain, they're going to be thrilled to death. And so let's hope that this comes to pass.
Most of the rain on this map, if you guys are watching, is like 12 days out, so far from a guarantee, but that's what the forecast would indicate this morning.
Despite an increase in biofuel production, soybean supplies are piling up. Farmers across the nation expected the expanding biofuel industry to utilize a sizable amount of soybeans and bolster the market. Biofuel production has grown substantially, increasing 400% since 2021. However, an oversupply of soybeans has occurred as a result of big crops and reduced export demand for U.S. soybeans. Soybean farmers are also dealing with a glut of imported used cooking oil that is being used to produce biofuel. Low water levels on the Mississippi River and the unexpected closure of ADM's crush plant in Iowa are also pressuring the soybean market.
So this is like the big picture yin to the yang that we let off with. This is the other side of the story, and probably the bigger picture part of the story is that we've still got a glut globally, domestically. We're importing all this used cooking oil, which if we weren't, we'd probably be using even more soybeans for biofuel. It's a problem for sure.
No, I mean, there's no question about it. When you look at how many beans we're going to have sitting around here, 550, I mean, I don't know. Is the crop going to get adjusted? I've had people say, hey, this thing's got to get adjusted a bushel lower. Okay, well, so, now we're down to 470, I mean, and I'm not trying to be a smart aleck. It's just that we'd have to take a lot of air out of the sails here if we're going to start talking about a bean situation that's not burdensome. The problem is, if you want to start getting bullish on me, and again, I'd love to go along with you, but if you were, based on domestic balance sheet, then let's look at the world balance sheet. I mean, the world balance sheet is not good, and so we don't wish ill will on anybody, of course. But if the Brazilians have a normal size crop, Joe, well, there's just too many freaking beans. I mean, that's all there is to it. And so I think from a domestic situation, I hope that there is the used cooking oil situation gets rectified in some way. I mean, we've been talking about building out this renewable diesel situation. Let's use something here. I mean, we're importing this stuff, and we're importing ethanol to make SAF. I mean, I don't know. It just makes no sense to me. If we're going to go down that road, let's at least use what we're growing here.
Yeah, I don't like that taxpayers are subsidizing foreign imports of cooking oil. Doesn't make a ton of sense.
No sense at all.
U.S. ethanol production increased for the third consecutive week last week. Weekly output of 1.04 million barrels per day was up marginally on the week and up 3.8% versus the same week last year. Ethanol stocks were the highest level for this time of year at 22.3 million barrels. The print was up slightly compared to the previous week and up 3.5% compared to the same week last year. Implied gasoline demand saw a big drop, falling 11% compared to the previous week, but still up marginally versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 7.1% compared to the same period last year.
Ethanol production continues to be very strong, and we're running well ahead of the pace needed to hit USDA projections. You could make the argument, certainly, that if we can keep up this pace, USDA's got to tack on 100 million bushels to their corn demand via ethanol number. It could be more than that.
Oh, absolutely. And I mean, I know this week wasn't quite like last week as far as stocks were concerned, but we're seeing a fair amount of disappearance there as well, as far as ethanol stocks are concerned. It's not like we're burdensome. And so, yeah, I mean, this is a good thing. I mean, cheap corn has definitely done its job, so to speak, in curing cheap corn. But I'm with you. I think that you can start tacking on a little bit. I don't think the USDA does anything yet, but I could certainly see after the first of the year, going ahead and tacking on 25 or 50 at least. They're probably going to wait. I mean, they're usually pretty hesitant to make those adjustments, but I think that they'll have to make them the way that it looks right now.
Yeah, so that could knock your carry out down from 2 billion even down to, could be down to 1.9, could be down into the 1.8. You get exports to cooperate, you could absolutely be down into the 1.8 and change. That would be nice.
USDA reported multiple flash sales on Thursday. U.S. exporters sold 8 million bushels of corn to Mexico for delivery during the current marketing year, and exporters also sold 4 million bushels of corn to unknown destinations for delivery during the current marketing year. Since the beginning of the week, exporters have sold a total of 89 million bushels of corn through flash sales.
Just to clarify something, so there was some headlines floating around earlier this week about this. Mexico wants to ban GMO corn imports, but it's not commercial corn. It's white corn for human consumption. It's a very, very small portion of what we export to Mexico. So it's not a threat here. And that's clear given what Mexico has bought this week, which is a lot.
Yeah, they bought a lot. And what people got to understand as well is Mexico's got a ton of cattle. I mean, they feed a ton of cattle, and so a lot of this corn that goes south is for feedlots, and so they don't care as far as that's concerned. I'm with you. It's just the non-GMO corn that they want is going to be for tortilla chips. I mean, that's pretty much what's going on.
Yeah, I'm not overly concerned about that headline. There had been at one point last year a concern that maybe like all GMO corn imports could, but it's not going to happen. It wouldn't make any sense. What did cattle do yesterday?
Cattle futures were narrowly mixed. Live cattle were 50 cents lower to 22 cents higher. Feeders were 60 cents lower to 62 cents higher. Box beef was higher. Choice ended the day at $319.26. That was up 13 cents. And select ended the day at $293.52. That was up $1.15.
Has the cash cattle market still been strongish?
Yeah, we already saw cash bids down in the South this week at $188. That's a $1 to $2 higher from last week.
Matthew, are you a cattle market bull again?
No.
No,
I'm not. And here's the thing. I mean, I was forever, you know that. I'm more of a guy that says, hey, I hope the market goes on up, but if you're not protected, you're a freaking idiot. I mean, that's kind of where I'm at. I think get some sort of level of protection in place, some risk management, because we've been hovering in the high 180s again, and it wasn't just 3-4 weeks ago, and we're in the 170s frustrated, and then the market takes off on another run higher. I don't know. You got to be protected at the very least. If you want to be bullish, be bullish. Just because you put something in place beneath you does not mean that you're not bullish still. It just means you don't want to get your butt handed to you.
We don't do recommendations here, but take a look at LRP, take a look at options. I mean, there's some stuff out there that's reasonable. Outside markets are fairly quiet this morning. US dollar's off a little bit. Stocks are up a little bit. Gold's up $18. Crude oil is down 37 cents in the December WTI at 69.72. Have a great weekend, guys. Matt, thanks for joining us. We'll be back on Monday.